Hello, everybody, and welcome to the weekly update preparing for September 2 and beyond. A lot of people got kind of shaken on Friday, and obviously so. It was the very first time that we've had a 100-point move since late June, almost 2 months to the date. This was not, in my opinion, a flash crash. I don't think that it was. But what it was what I'll explain to you, which I've explained already as we were going into the high that we placed back there a week ago at 43.25. And I'll start you off as we go backwards so that we can go forward because, again, we are forward forecasting. We're not trading now, we're trading what's coming. And that's where you make your money is trading what's coming, not what's in front of you. And a couple of people really screwed that up on Friday. And while I love you all like family, I have zero sympathy for it because I've been laying this out for 2 weeks. You go back to 2 weeks ago on the August 19th prep video and you go through it. I went through this. This was a long one. It was about 45 minutes because I wanted to go into detail to everything as to how we've been rallying up into this 43.25 that we got a week ago because of the shorts that were placed back in early June and all the short covering that was taking place. And that was why we were having these gap downs that the retail was buying up because the big money was just sitting there covering their shorts and the retail was getting FOMO'd into it thinking, yes, that's it. Kramer's right. The bottom's in. We're going to 4,400. Everything's fantastic. Buy all the stocks you want. Look at Apple. Look at Apple. I also said I was going on a hunger strike until we got a 5% drawdown. And let me tell you, I ate like a fat fucking bastard this weekend after having gone 10 days of having nothing but water and hard boiled egg whites. So, again, no sympathy whatsoever. On Friday, prior to the Powell pump, I put out an email and I wanted to make it clear what it looked like from the close up point of view that we were looking for 4,200. We got it. We got our bounce as we had our dip. Our dip, as I'll go over, was a little bit displaced. And then how we were looking as if we had a nice ABC, very calm, very collective, and that what we should be looking at now would be a bounce somewhere up into this 4,200 to 4,222 area, kind of get to that little gap fill. Would have been the best little scenario to set up after we had already had that dip. Didn't get it. As you see here, the wider view where you make your money forecasting forward, pointing to the downside. The downside is coming. If you want a nickel and dime about a cheap ass fucking 50 points to the upside, feel free to go and fucking do it if you wanted to get the best possible entry level so that you could get a ride to the downside on a dip on a zero expiration date when you've got a wider forecast that's telling you we are going down. Again, preferred, wider view, preferred, again, wider view. And again, on that 415, what we were looking for was for that 415 to support. Didn't matter what Powell said, didn't make any difference whatsoever what he said. The market had gotten up to the level where it had gotten on nothing but short coverings. There was no actual reality of buying taking place to move us up into that level, and why it was so easy for us to fall down on that level. Because, again, here it is that I'm pointing out on this. We would prefer to have the week close below 41.95, which we got. We were looking for support at that 41.37 and then get a bounce next week up into that 42.47 before we get the big move down to 40.30 into that 40.50 area, maybe below 4,000 down to that 39.45, where we have the CPI data coming out September 13th. So again, looking at this, we're up at that 42,000, 4,200 level twice at the open, and again, right when Powell began to speak, twice we were up at that 4,200 level on Friday. So you're looking at 22 to 50 points to the upside, where you got 250 to 200 to 300 points to the fucking downside, and nickel and diming and missing out on what worked out to be like this here. If you wanted to go ahead and play the 0 day trades, you go ahead. You would have got 1,000 points on your 415 puts on SPY. The ones that I was telling everybody to go shopping for only went up 100%. The September 9 415s and the September 30 410s. For September 9th, 2 weeks away, September 30th, a month away, protecting the capital so as not to be involved in this fucking tractor trailer rollover that we were going to get there on Friday with the volatility of Jerome Powell, who hasn't spoken since months ago at the FOMC meeting. But if you decided to go that way, you could go ahead and go that way, because on August 17th, I put out the chart for everybody of what we were looking at for a bullish path and what we were looking at for a less bullish path. Obviously, the bullish path broke because we already covered that as we were going into the weeks. We got the less bullish path, and we were down here right to this trend line, which I'll show you on the charts when we go to the charts. Here again, on the SPY that I had posted there on the Friday, the wider view is to be looking down for that move down to around 400. And then from 400, we can start looking for a most likely move back up to the upside, up higher than where we were, and get up to around that May high before we get the big move to the downside, which I kind of covered here. Again, on August 16th, when I posted this and shared it with everybody. How we had this big rising wedge already overbought on the RSI 14, not the 5, the 14. Divergence on the money flow, get our dip, get our bounce, and then we go eat shit. Months, maybe 6 months away before this even happens, maybe not even until the beginning of next year when this starts to happen. And again, this can fall apart where this downside doesn't happen. Downside projections have been happening for years for these big waves to take place. We're in a market right now where there's no place that you can put your money. There's nowhere you can put your money. You can't go buy houses. You can't put it in a bank. So the only place where you can actually put your money is in the stock market, which it's been like that for a couple of years. And that's why we're able to sustain these levels. All that's going to matter is when we get into earnings season, which is coming up here in a couple more weeks. Apple posted this as well, how we were looking at this big overbought level. Oh crap, right to that resistance level. We kind of got over that, and still the nickel and diming of the shorter term time frame, and it chewed a lot of people up. Where what did we get? We got the big drop there on Friday, which took us right down there to the 200-day moving average, right down there around 160. So again, this was what we were projecting for back on August 19th. Going into that week, it fell apart very obviously, even though we were oversold. Dropped down all the way down here to 41.19, cleared this entire CPI gap that we had from August 9th, hit that trend line, and then we got our bounce back up here to right around the same level where we started. But as you guys know, we obviously did not get back up to 42.27. We went higher, and that's the reason why we've got what we've got. So again, what happened here on Friday with everybody that was trying to buy the dip and play that call, this is what you got. Because you're trying to be cute, you're trying to be inventive, you're trying to be smart, and that's what you got when you could go out there and just go out and buy the what we were talking about here. I mean, it started here at 8:30 in the morning. started posting here. SPY 421, 422 in view. What was the high that we got there on SPY? The high that we got there on SPY was 421. Move your calls, move your stops up immediately. September 9th, September 16th, put shopping begins. Close your spread right there at 9:21, 9 minutes before the open. I'm posting there. I am shopping for September 9th, September 30, 408 puts. Then I changed it at 9:51 only because I wanted to be a little bit more secure. I said, okay, now I'm going to look for September 9, September 30, 415 puts and 410 puts. The 415 puts went almost 200%. The 410 puts went just around 200%. The Powell pop took us right to 421, 422. Literally, it's right there. It's right there, 421 in my face looking at it. And then we fell apart. So, again, you're looking here at these little tiny things to the upside and your big moves to the downside. And, again, going into the week, I even posted this spread for everybody to take. The September 16th, buy the 420 puts, sell the 400 puts. It's a $380 trade. You make up to $1,620. SPY closed at 403.90. This is a 300% profit that you had right there with very little risk in front of you and over 3 weeks left on the trade. I love you. I love you. I love you. But God, sometimes you guys are hard headed because I was getting messages in the middle of Powell, excuse me, in the middle of Powell's third sentence, asking, what do I do? What do I do? What do I do? I'm not going to reply to those anymore. I'm not, because you're supposed to come into this prepared. It's your money. It's your family's money. It's your future. And if you're not going to be prepared when you come in, when you've got an email 3 hours before the opening bell, 2 hours at the latest, weeks of advance preparation for what was going to be due, you're fucking yourself and you're fucking everybody else. And I don't want you doing that. So whatever I need to do to get you, whoever you are, to be a better trader and be better prepared, I'm on my hands and fucking knees like Jerry Maguire. Please help me to help you. Help me fucking help you. Because, God, this is the greatest video game in the world. And all you've got to do is treat it the way that it needs to be treated. Stop focusing on the fucking barrels of fire that Donkey Kong's throwing down and focus on the timing of being able to get up there and save the fucking princess. I apologize for the rant. I don't apologize for the language because that's the way that I fucking am. And I mean it from my heart. And that's when I'm speaking from my heart, when you start hearing that. So anyway, going on. We got 2 consecutive weeks down, which is good. Very, very good. You got 2 consecutive weeks down on the SPX. To get a third consecutive week down is a very, very rare occurrence. Very rare that you get 3 in a row. And how we came down, again, everybody freaking out, panicking. The reason we had these Fibonacci's drawn originally was because we were looking to see where the lower low could be. The 38.2 retracement coming off of the June low, 40.62. The low that we got, 40.57.66. So it's off by 5 points. 38.2 retracement, very typical for a wave 4. ABC, 1, 2, 3, 4, 5, the way that it looks as if this is a completed move for this right here. And now we should start to see a little bit of a bounce up to a lower level around that 4,200 and start to just kind of wean this off while everybody leaves it in this middle zone here, 4,200, 40.50, that 150 points, which I'll show you again, until we get into the actual interest rate hike, which is coming at the end of September, which excuse me, and many other people are calling bullshit on Powell. He's going to do a 50 basis point hike. We're not going to get a 75. We're not going to get a full point. He's going to do a 50-point hike, and that's going to make everybody go fucking euphoric, and we're going to be heading up for that 4,300, 4,400, like we said before. And then when earnings come out in October, we'll start to see the retracement back down to the low 4,000s. Come over here on the NDX, and you can see it a lot clearer because the NASDAQ weight, that is your legs. We had this 1-2 that we were looking at, and then we had this 1-2-3-4-5 to make our wave 3. And now, since that wave 3, we've got a pretty clean looking 1-2-3-4-5 move, where again, this should be all of wave 4, possibly. I apologize for the coughs. Possibly all of wave 4, and now we go for our wave 5. Possibly, again, possibly, I'll go ahead and just draw a very clean visual trend line of what we've got going here. And as you can see, if you come off that July low, right onto that low, we're right on the support level. So again, should be that we have come to a pivot point to where this could very possibly be all of wave 4, and now we are looking for a, again, no big money investing and going large into any of this and start to bounce, which means we're not looking for a euphoric bounce back up to that 4,200 level, but instead looking for a technical bounce. Here's Google. I'm looking at Google on the daily. Not necessarily a buy divergence on the daily, but you are obviously oversold. I got suckered into this trade because I like this 113 level. I like the 50-day moving average back up there above that. I got into that trade very small for September 2 and September 9. I know a couple of other people followed me, but I did mention before that I want to start making Google my bread and butter trade that I want to look at. I like the price at $100. I've loved the stock for years in the way that it's very clean in its movements. So I'm very much looking forward to that. Here's the 4-hour chart looking at the RSI. And as you can see here, you've got a lower price. You've got a higher RSI. On the 4 hours, not 1 hour, not 5 minutes, not 15 minutes. 4 hour, we got a nice buy divergence. We can come over here and look at Apple. Apple on the 4 hour oversold as well. Another one with the buy divergence. Lower price, fell out of that channel. Buy divergence with a higher low over there. We'll come over here and look at Tesla because everybody loves to trade Tesla. Tesla oversold. No buy divergence, but we do have an oversold over here on the 4 hour. Apple, we already looked at. Google, Amazon, Nvidia. Let's look at Nvidia. Nvidia, big buy divergence on this 4 hour chart. Massive. AMD, same thing, right? Not so much, but yep, we got a nice buy divergence over here on the 4 hour on AMD. Come over onto Amazon, which had a nice drop down right into that earnings gap where it finally started to retrace. Still very shallow, not to that 127.24. Oversold, buy divergence on the 4 hour. You know, again, we've still got to see a lot of this stuff take place over in real time. SPY, same thing. Boom, buy divergence, 4 hour. QQQ. Boom, lower low, buy divergence, 4 hours. So, you know, again, you're into that space right now where it's very clean and it's very technically supportive of a prescribed bounce to start taking place as early as Monday morning around 10 or 11, because when you have these big major lows on Friday, they kind of like to follow off and have a little bit of a lower low there on a Monday. Not necessarily required, but again, we are right there, right at that 38.2 retracement, filled a couple of gaps that we needed to fill from back there in July. And here, what I'm looking at here is the weekly chart. And, you know, just kind of zooming in for you here, this trend line that we broke under is the highs from 2018 and the COVID highs. This trend line that's right below us is the highs from January 2018 and the COVID high. So, you know, we're still up there in the highs level, not even down into the lows, but What I'm really concentrated on to show people is, you see here we've got the 2 red weeks. Here you had the 3 red weeks going into that June low. This was, as rare as it may be, this was, as you remember, I prescribed and suggested that we were going to get a lower low to put in that buy divergence, because we had this once every 7 years, 7 consecutive weeks in a row. We've had 6, we've had 8. Here we got 7 in a row, and then we had that big weekly candle after that. 2 weeks here, 2 weeks here. These are back here in January. These are or February. You had your 2 weeks here in February. Your 2 over here in February. Come back over here into November. Two, two over here in May 2021. Here you had 3, but you had a doji candle in March. March, you always like to get that little bit of a sell off over there. So again, being rare, 3. This candle here, it opened at 38.42.51. It closed at 38.41.94. 1 point, less than 1 point for the entire week back here. So again, like I say, they're very rare. Come over here into 2020. This was October. Again, with the rare. September, 3, rare. October, 3, rare. So again, with September, what we've done the last 3 Septembers is we put in a nice high and then we've sold off. It's not necessarily a requirement that we do that, but that's what we've been doing on the Septembers. This is coming off the COVID lows over here, and this is the other September going back here. September 16th, September 30th, 23, and September 30th. These were your middle 3 weeks of September back in 2019. Back in 2018, your September, that was where you posted your high back here in September 20th. We put in the high. Here was the boom, 1, 2, 3. You got your 3 in a row. 3 over here in December, as we put in that 2018 low. Look, I'm blowing air into a bag right here now, but yeah, we've come to that fruition point where we had seen what we were expecting to see. We've got right down into that channel level, and coming over here onto my detailed chart that I work with, this obviously broke the 250 area, that 41.21 that worked out perfectly. So that fit for your 3. This was obviously your wave 4. This looks very much like your wave 5 over here. Instead of it being a 3 wave down, we've got 5 waves. Again, we were looking at an ABC. Very much looks to be a completed 4th wave. Filled this gap from back on August 2nd. Filled this gap from July 28th. So now we have no gaps down here below, except for this way, way, way down here from back on July 26th. Long ways away. And then you had the FOMC meeting low way up here. So you got your 2 gaps up here above. Excuse me. Trend line that we were working with over there obviously got broken down on. Look over here on a 90 day so that we can get the rest of it. We'll move this. This is where we were being aggressive. Now we'll take our trend line and we'll move it. And again, some of you might be looking and saying, how am I supposed to see or decipher any of that stuff that's on your charts? And you're not, because this is a zoomed out detail, and what you are working with is a zoomed in detail, and that's what you're trading off of, because the zoomed out and the zoomed in, and again, why my trend line comes down here, that was why we were thinking we might be able to get all the way down here. But again, look at this from a technical point of view. Extremely oversold on all different kinds of levels. Look at where we are over here with our tops. Our tops came up here, got our top. Now that we're down here and we're starting from here being considerably oversold, there's a much better opportunity for this to take place, where this recovers and over the course of the next couple of weeks starts to make some pressure over here onto this 43.36. Now, for me, I will not, no way, shape, or form, be getting bullish and buying calls come Monday, Tuesday morning. What I'm looking for here from a trade point of view would be more about selling into the weakness and selling the call spreads, maybe playing some bullish put spreads, but looking for those individual stocks that aren't able to hold themselves and playing that little tight range that they've got. But again, because a lot of people have screwed themselves now. Now you're playing with a 25 VIX compared to the 21 VIX that we had when that's when you're supposed to be buying your puts. So anyway, guys, like I say, I mean, I love you. I love you. I love you. I love you to death. I love everything about it. And, you know, again, don't try and be cute and really get involved into these deep, deep days when you've got a major catalyst. Go out and get some time. Time is cheap. I mean, you couldn't have gotten a cheaper time than what we were playing with right now, and we've been waiting for that for months to get that cheap fix. So, again, I'm open for the one-on-one calls with anybody, any member. Message me. I'll spend you. Many of you have already done it. I'll work on your. I won't say your weaknesses. I'll say I'll work on the areas where you could be stronger, because you're already strong, because you've already made it to where you are already. And all we've got to do is be able to hit those muscles a little bit harder and a little bit better, so that those muscles will be either stronger to lift more weight, or the definition will start to come out and they'll be able to be more attractive, so that you can be more confident, so that you can trade even better when you go to this video game of that we play with. I love you guys. I'm sorry for taking up all of your time on a Sunday. My apologies. I'll see you in the chat room. I'll have an email out for you tomorrow morning.